Almost all Adani Group stocks trade with gains, big gains. In fact, Adani Transmission reported a decent set of numbers yesterday. Promoter releases pledge worth $1.1 billion across group companies. Keep an eye out on Adani Ports' third quarter numbers today too.
Tata Steel reports a net loss of around 2,500 crores in the third quarter, but that was on account of a one-time non-cash expenditure. EBITDA widely misses estimates, while margins contract on the back of weakness in European business.
Hindalco, another big loser on the Nifty after subsidiary Novelis reports a weak third quarter. Sales fall about 3%, while shipments too come in lower by about 2%.
RBI Infra is buzzing after it announces the stock split in the ratio of 1:10, which is one equity share with a face value of 10 rupees into 10 equity shares with a face value of 1 rupee.
Then we have a bunch of other numbers as well. Moltech reports a weak third quarter. Margins slip over 130 basis points. The stock lower by about 2.5%. VMAR too tanks after a weak quarter, where it saw EBITDA fall by nearly 30%.
Hello and welcome to Chartbusters. Well, the markets today, they are a little bit flattish as we speak. The Nifty bank, though, that's holding with a gain of close to around 70 points odd. We'll get you a couple of managements later on in the show. But for the time being, let's shift straight to a Network 18 exclusive. Finance Minister Nirmala Sitharaman spoke exclusively to Rahul Joshi on two key macro issues. She expects a declining trend in inflation to sustain and says India's twin deficit problem is not as severe as before. Let's hear her out.
The way in which inflation has come down, both by RBI's action and by the government's action, and the government's action has been steady and at it for some time. So I expect, since the fall in the inflation, it doesn't seem to be just a momentary or a one-month affair. It should sustain itself in the process of coming down.
Any concern that you feel is there because of the twin deficit problems?
It's not as severe as before.
Yes.
Yes, when exports come down, you're going to have the current account deficit. But it's also now suddenly going up as well as it was before, a couple of months ago. Monthly fluctuations I say.
Yes.
Fluctuations should not worry us.
Right, so those were some comments coming in from the finance minister, her first conversation with a TV channel and a network after the budget. Just keep an eye on a bunch of stocks. Kotak Mahindra Bank from the frontline end has moved to the high point of trade. We are seeing some traction in State Bank of India as well. The Nifty Bank by and large is outperforming. And we do have some moves coming by in a lot of these mid-caps as well. We have Havells, which has spiked from the lows of trade, and BHEL too has moved to the high point of trade. So what we'll do is we'll take note of a lot of these individual stocks. On the other side, we have the management of Kolte Patil, Rahul Talele, who's the group CEO, joins in to discuss the quarterly performance. Welcome back. You're watching us here on Chartbusters. Let's get straight to the management of Kolte Patil. They reported a good set of third quarter numbers, but remember the company had already announced the volumes of the third quarter. In January itself, they had announced the operational update, and for real estate companies, that's more important than just the P&L itself that they report. We do have with us the group CEO Rahul Talele joining in to discuss the future of the company. The quarter gone by was good. Thanks a lot, Rahul, for joining in. And that really is the question, will the fourth quarter be as good as the third one? What's the outlook on, run rate, quarterly run rate? Because if the fourth quarter does exactly the same, you'll probably be clocking in a run rate of 750 crores per quarter. Is that the way forward?
First of all, thank you for having me on your show. See, we have just concluded the highest ever pre-sales number for the group in terms of value, in terms of volume as well. And it is backed by a strong launch pipeline that we have achieved in Q3. And likewise, we are sitting on a very strong launch pipeline in next, couple of months. So having said that, we are confident of achieving a similar or in fact better numbers in the coming quarters. So backed by our strong launch pipeline. So on top of that, see, on a quarterly basis, last FY22 we grow at 45%. FY23 we are expected to grow at around 30%. Certainly, I won't be happy with a 20% growth for the next financial year. So having said that, our quarterly numbers will be as good as what we have concluded in last quarter.
All right. So Rahul, in value terms, it's around 1,500 crores as of the 9 months. If you do as well in quarter 4 as you've done in quarter 3, you'll end this year close to around 2,200 crores, right? At least.
That's correct.
And on that, you want to do a 30% growth. So by next year, you'll be close to around 2,900 crores.
So I said we won't be happy with a 20% growth. Certainly, it will be upwards of 20%.
So anything between
so
2,000.
We'll announce our guideline for next financial year very soon.
So at 20%, it'll be 2,600 crores, or you want to do better than that? So closer to around something between 2,700 to 2,900 crores is what you can look for in FY24, going by the numbers you're giving us.
That's correct. So let me share one more thing. See, we are currently sitting with a launch pipeline of 7,700 crores. Out of that, we have launched 2,000 crores worth inventory. So another 5,700 crores of inventory in a launch pipeline. On top of that, we have the net, the top line potential of around 22,000 crores. So barring this 7,000 crores, still we are left with 15,000 crores of, top line worth land bank. So, and on top of this, we are very aggressively looking for a business development opportunities. So if I combine all this, certainly our, the next financial numbers will be very, aggressive.
Talking about aggressive, I saw two things that you've recently done. The first one, you've made inroads in the Bengaluru market, very small right now. What's the kind of expansion that you're looking at in the next 2 to 3 years? And secondly, you've mentioned that you're targeting new business development with a top line potential of almost 7,000 crores. Can you elaborate upon both of them?
Yes. So let me answer the second question. So out of 7,000 crores, we have already announced one deal with a top line potential of 1,400 crores. That is we have acquired a asset in Pune with a top line potential of 2.5 million square feet. After acquisition, in couple of months, we could launch that project and we got the very good velocity in that project. Simultaneously, we are working on a multiple launch pipeline so the commercial discussion has already been closed. Technical and legal due diligence is going on. So in order to take the advantage, in order to squeeze the timeline between the, the closure, legal closure and the launch. So what we are doing, we are parallelly working on the approval cycle. So like what I just mentioned about the QLA, post acquisition we launch in a couple of months. Similar you can see in our 3-4 BD closures in the near next couple of quarters. So we'll be acquiring assets, we'll be announcing that to the market, and in next 2 to 3 months we'll be launching that project itself. So apart from this, see, our diversification target is in the range of 35% of top line value we are expecting to come from non-Pune projects and 65 from Pune projects. As we want to strengthen our position in Pune, we want a better visibility in Mumbai and Bangalore market. So we are in track through our business development opportunity, and I'm confident that we'll achieve this diversification in near future.
All right, in the near future, you expect 35% of your revenues to come from the non-Pune markets. But this 7,000 crore, how long will this take for you to execute? I mean, by when can you recognize the revenues of 7,000 crore through these agreements?
So in this 7,000 crores, few deals are large size deals. So wherein the, the project cycle can be, 4 to 6 months. The few deals are small deals, mid-sized deals, wherein the entire inventory can be launched in one phase itself. So over there, the tenure would be in the range of 3 to 4 months. So depending on the project size and depending on the sales velocity, I could comment better in terms of the the revenue recognition. But apart from this, we are sitting on a very strong launch pipeline, and this on year, we'll be getting a better revenue recognition. In fact, this year we are going to achieve not only a best ever sales number, we are going to achieve a best ever collection number. We are going to achieve a best ever revenue recognition numbers through CCM methodology. And we are confident about maintaining our strong margins, and we are that is in line with our targets.
Okay, all right. Rahul, final question before we let you go. You know, real estate is a bit of a tricky subject. Suddenly, when you're focusing a lot on sales, that debt number suddenly starts to worry. For you, what's your current debt number, and at peak levels, what will it look like?
As a group, we have followed this philosophy since last couple of decades. So we are, so our leverage is very low. Currently, our net debt to equity ratio is just 0.2%. So 0.2, and still there is a good amount of leverage, and we'll explore that opportunity to acquire a good potential land bank for the company. But we are very well placed in terms of the leveraging for the company in real estate.
All right. Thanks a lot for joining in and giving us all those details. Wish you good luck for the growth going forward, and hope to speak to you when you have drawn up your plans for better guidance for the next year as well. Let's take a short break. On the other side, we have with us the management of PG Electroplast. Vikas Gupta, who's the managing director, joins in to discuss the company's third quarter earnings. Stay tuned.
Welcome back. You're tuned in to Chartbusters here on CNBC-TV18. Well, as promised, let's get chatting with the management of PG Electroplast. They report a strong set of numbers, and more importantly, they've also gone ahead and raised their guidance for FY23, telling you that they're feeling quite confident. Mr. Vikas Gupta, the MD of the company of the operations at PG Electroplast, joins us. Hi, Mr. Gupta. Thanks so much for joining in, and good morning. Well, could you tell us, on your business itself, you have gone ahead and upped your guidance. For this year, you're going to do close to around 2,000 crores, which is good. What is the outlook for FY24 at current reckoning? And given that you have added capacity, at peak levels, what kind of revenue potential can you attain? Go ahead.
Yeah, good morning, Nigel, and thanks for having me on your show. We have raised our guidance to 2,000 crores for the FY23. That is based on the order book and the visibility that we have for the current quarter. Going forward, the kind of capex that we incurred for the FY23, where we have increased our capacities in AC manufacturing as well as in the washing machine manufacturing, we are hopeful that we should be able to, if we sweat our assets properly, we should be able to achieve a revenue of around 2,500 to 3,000 crores. But that is subject to various assumptions. So we will be sharing a specific guidance for FY24 later on.
All right. In any case, so 2,500 to 3,000 crores is the range that one should be working with for FY24 itself. What about margins? I mean, the last year, there was a fair amount of volatility in commodity prices. Recently, we saw some improvement out there as well. At 2,500 to 3,000 crores of revenue, what kind of margins can you work with? Because then you will have the benefit of operating leverage as well, and commodities staying as it is.
Yeah, so Mangalam, what happens, like, we have to see how the competitive landscape is also operating. So currently we are maintaining expecting a guidance of around 7.5% for the EBITDA margins going forward also, as we increase our revenue of the business, because the overall the competitive landscape is going to be, I think, will kick in, because a lot of new capacities will come in. So we have to be cognizant of that fact also.
All right.
Okay, so you're saying that on a steady state basis, you like to maintain it at 7.5%, right?
Yes, yes.
Okay, got it. But going by the numbers that you all have given, for this year, you will be doing it closer to around 7%, right? Because 2,000 crores is what you're guiding with an EBITDA of around 140 crores. But going ahead, you're saying 7.5%. Now, Mr. Gupta, since the business that you're in is looking up and there's tremendous potential for growth, but even if you grow by 25%, you'll hit your peak levels in the coming year. So the big question is going to be, what kind of a capex plan do you have? So give us two numbers. One is, what kind of a capex plan do you have? Post FY24 onwards, you'll require that. And what is the asset turn that we can look at?
So, Nigel, right now, the asset turn that we have is in the range of around 3.7 to 3.8. We are targeting an asset turn of almost around 4.2 to 4.5 in FY24. So going forward in FY24, we are looking at a capex of almost around 120 to 130 crores. That is very tentative. We will be sharing a specific guidance on that as well going forward. But we will be increasing our capacity going forward, because we are seeing a robust demand and robust response from our clients for all the products that we are manufacturing.
Gupta, going by the number that you're giving us, 120 crores at an asset turn of around 4 times. So this number can take you up by another 500 crores of revenues. Are we getting that correct?
Yes. Yes.
So from that revenue potential of 2,500 to 3,000 crores at peak, you'll go to the vicinity of 3,000 to 3,500 crores at peak, post this capex.
Yes. So that will be basically for the, because there is always a lag between the capex and the revenue that you can realize from that.
Yeah.
So we have to figure in that.
Right. I just wanted to understand the composition of your revenue at 2,500 to 3,000 crores of revenue, because your AC capacity, you had said, would peak in the next 2 months itself. You have some expectations for the washing machine business, sanitary ware, you said could be around 15 to 20% of your revenue over the next couple of years, etc. as well. So what is your current revenue composition, and where does it go to, say, next year? What increases in its proportion?
So if you look at largely the product business is going to be the growth driver for our revenue increase. Currently, this year, FY23, we are targeting a product business to contribute almost 1,200 crore rupees in a revenue. Out of that, 900 crores will be coming specifically from air conditioners. Almost around 260 to 300 crores will be coming from washing machines, and around 40 odd crores will come from air coolers. At the same time, the electronic division, primarily including the LED television, should contribute to almost around 150 to 200 crores. So going forward for FY24, we are looking at again a rapid increase in the product business and significant growth in the product business from the level of 1,200 crores to a level of almost around 1,500 to 1,700 crores going forward for FY24.
Okay, all right, Mr. Gupta, all this is looking very good. The street likes what you're saying as well. The stock is up 3.5%, while the markets are more or less flattish. But leave us with how your cash flow is shaping up, and also what is the current debt in the books, and where does it go up to?
So currently, our net debt has increased in the quarter close on December 2022. Largely, that has been to take care of the funding for the working capital requirements, where we have to pull in a lot of inventory for AC manufacturing, because we saw a sharp increase in our AC revenue. So we had to pull in a lot of inventory for that. Going forward, if you look at the cash accruals that we will have, I think we will not be having a large dependence on increasing our debt to fund our capex for FY24.
Right, and on the asset turnover itself, I was just looking at a couple of your peers. Dixon Tech has an asset turn of over 7-8 times. Amber as well, just going by the numbers, rough numbers, has an asset turn of over 6 times. Why is it that yours is lower? And even when you aspire to move higher, it is around 4.5-5 times. Wanted to understand that, one. And secondly, there have been so many schemes announced by the government with regards to component manufacturing, etc. Will you not benefit further from that as well?
Coming back to your first question, please understand the asset turn in our case, plastic molding still is a sizable portion of our revenue of our business, where there is a large deployment of the fixed assets. So going forward, we are trying to improve on the asset turns. Definitely, if you look at the history also, where the asset turns was around 2.5, we have moved to a level of almost 4 now. Going forward, definitely as the electronic business also improves, so asset turn should improve for us.
Okay, all right. Thanks so much, Mr. Gupta, for stopping by and giving us all those details. We'll hold you to these numbers next time we chat, but for the time being, it appears business is on a bit of an upcycle. Well, on that note, though, we'll have a wrap up on this edition of Chartbusters. You stay with us. Trading Hour comes up next.
Brought to you by Next.